Welcome back to the Liberty Mundo channel, where we help you win back your freedom. Today we're diving into a topic that might just blow your mind: exit taxes. Yep, you heard that right. Some countries actually make you pay taxes just to leave. Stick around, and I'll walk you through 9 countries that have these taxes and why they're unfair. First up, let's talk about France. France was one of the first countries in Europe to come up with an exit tax. They started it way back in 1999, got rid of it for a while, but then brought it back in 2011 and made it even stricter. Basically, if you own a lot of assets in France, like over 50% of a company, or more than 800,000 euros in value, they tax your unrealized gains when you leave. That's money you haven't seen yet, but the government thinks they should get their cut anyway. It's no wonder many entrepreneurs and professionals are leaving France. The government sees people as sources of money rather than individuals with rights, and it's really hurting the country in the long run. Next up is Canada. Now, you might think of Canada as the nice guy of the world, but their exit tax isn't exactly friendly. When someone leaves Canada, they have to pay something called a deemed disposition tax. That means Canada treats your assets as if you sold them when you leave, even if you didn't. Sounds fair, right? Some assets, like real estate, are exempt, but most investments are not. This is designed to discourage people from leaving and stop them from taking their productivity elsewhere. Now we cross the ocean to Spain. In 2015, Spain decided to introduce an exit tax for people with significant assets. If you've lived in Spain for at least 10 out of the last 15 years and have over 4 million euros in assets, you're in for a hefty tax bill. Spain already struggles with high unemployment, around 11% as of this year. This tax only makes things worse, chasing away successful people who could be helping to grow the economy. Italy is up next, and it's no surprise that Italy's exit tax is wrapped up in lots of complicated rules. If you want to move away and have significant holdings, Italy will tax you on your unrealized gains, even if you haven't actually sold anything. Italy's government is losing wealthy, ambitious people because of these rules. Instead of encouraging people to stay and invest, they're making it harder for anyone who wants to leave. And that's just keeping the economy from growing. Germany's exit tax targets those who own at least 1% of a German company. If you decide to leave, Germany taxes the increase in value of those shares, even if you haven't sold them. Imagine being successful and then punished for wanting to move. That's the message Germany is sending. Germany's high taxes and strict rules make it hard for entrepreneurs. The top income tax rate is 45%, and starting a business means dealing with lots of bureaucracy. So instead of letting successful people thrive, Germany is turning into a kind of golden cage. Let's head to Denmark. Denmark also taxes you on unrealized gains when you leave. This means you have to pay taxes as if you sold your assets before moving away. The government wants to make sure they get one last cut of your money. This sends the message that they always have a claim on your wealth, and it discourages people from seeking better opportunities elsewhere. No wonder the economy stays pretty stagnant. Successful people don't want to stay and risk being taxed like this. Norway recently introduced an exit tax for people with significant assets. If you've lived in Norway for at least 5 out of the last 10 years, and you have assets over 500,000 Norwegian krone, you're going to be taxed if you decide to leave. Norway's high standard of living is funded by high taxes, and this exit tax shows that they're desperate to hold on to people's wealth. Entrepreneurs are encouraged to leave before they hit that limit, which means Norway is losing out on innovation and investment. Finland also has an exit tax for people with significant assets, over 500,000 euros, and who have lived there for at least 4 out of the last 10 years. The government says it's to prevent tax avoidance, but all it really does is discourage ambition. Finland's system takes wealth from people at every opportunity. This sends a message that people are not truly free to choose what's best for themselves. The long-term effect is lower investment and less wealth creation. Last on our list is Australia. Australia has a deemed disposal tax that makes you pay capital gains on your assets when you leave, even if you haven't actually sold them. The good news is that real estate is exempt, but investments aren't. Like the other countries we've covered, Australia wants to make it expensive for people to leave. This discourages investment and stops people from moving, which ultimately hurts their economy. Exit taxes are becoming more popular. The Netherlands recently announced that they will introduce one in 2025. They seem to be part of a move towards citizenship-based taxation. This is when a country taxes you no matter where you live, just because you used to live there or are still a citizen. The United States already does this, and it seems like other countries are slowly moving in that direction. Exit taxes, like all taxes, are a violation of property rights. They treat people like the state owns them and their money. It discourages people from taking risks, being entrepreneurs, and creating wealth. Exit taxes show that governments see people as a source of money, like a dairy farmer sees his cows as a source of milk. This is against the idea of individual freedom. Instead of more government, we need less. Imagine a world where you could move, invest, and keep what you earn without the constant fear of losing it in taxes. You can have that kind of freedom now by moving to the right country and by arranging second residencies and citizenships. Get in touch with Liberty Mundo to get the ball rolling and create a world of real liberty and prosperity. If you found this video informative, don't forget to like, subscribe, and share it with your friends. Please subscribe to our channel and follow the link in the description to get a free copy of Your Wealth Fortress. With this report, you'll learn unique and valuable strategies for keeping your assets completely hidden, untouchable, and untrackable by anyone. No matter how much money you have, you'll learn carefully crafted strategies so that nobody can find it or even know what you have. Your assets will remain untouchable even with a team of the best global lawyers. Well-funded governments will not be able to lay a finger on your wealth. It's all detailed in Your Wealth Fortress. Bulletproof structures to protect your assets. Follow the link in the description to get instant access.